Google earnings out just moments ago, topping analysts' expectations, solid growth in revenue and profits for the world's largest internet search provider. Tech giant is at an all-time high in late trading with shares jumping more than 3% to 646, now 653 in after-hours trading. Joining me now to discuss, Feinseth. He is with Tigress Financial Partners. Andrew Chanin, he is CEO of PureFunds. And we also have Dan Shaffer of Shaffer Asset Management. Andrew, let me start with you because you have a very large holding in this. Are you tempted when you see that pop to take some earnings off the table?
So that's not the strategy of our fund. It is a passively managed ETF. So we just track the index, and this fund just launched today, so we were very happy having that position in the fund.
Yeah, so what did you think of the earnings?
It looks very strong, and from a big data perspective, which is what our big data fund is that just launched today, it seems very positive for the industry as a whole.
Yeah, Dan, what's your reaction?
My reaction is the opposite of that. Forgive me. The earnings growth is slowing down. The bottom line is good, but the earnings growth here from a year ago's quarter is only up over 6%. So quarter-to-quarter growth is starting to slow down on the top end, and the net earnings here did pop up a little bit because of the new CFO with cost cutting. But I'm concerned that a lot of the revenues are from overseas, and I'm very bullish the dollar. And if the dollar strengthens, I think they're going to see top-line revenue drop even further.
Yeah, so do you own it right now?
No, I do not own it.
And you wouldn't get into it, obviously?
Oh, no, absolutely not.
Ivan, I don't think you agree with that, right? Based on what you said before?
Disagree.
Why?
I think the stock is cheap. We don't look at earnings per share. We don't look at earnings. We don't look at accounting numbers. We look at economic profit and long-term economic profit growth. And they continue to increase their economic profit by increasing return on capital. I think it's positive. I think the stock is cheap and it will go higher.
Dan, what's wrong with that?
No, there's nothing wrong with that. I mean, if you get the momentum of the market, we're based on where it's priced now, that's fine. My only concern is that as an institutional investor, of somebody who's looking at growth companies, this company's stalled. The growth has stalled if you go quarter to quarter with the increases year over year from those quarters. And, you know, there's so many, I look at it as a probability game. There's so many other stocks and companies that are doing much better quarter to quarter growth. I'm looking at it from a technical point of view. It just wouldn't be in my portfolio.
Andrew, that is the common complaint with this stock. How do you respond to that?
You know, right now, I'm looking at big data as, yes, it's a technology company, but it's a company trying to make a bigger footprint in the big data area. And I think that's going to be an area of huge, immense growth for them. You're looking at what they're doing with YouTube and the programmatic search, and they're doing with AdWords. And I think that's going to be a big driver going forward, and one that they haven't really tapped into the value of all the data that they're taking on every single day.
Okay, we'll leave it there. Thanks to all three of you guys. Good stuff. David.